Good afternoon. So I know it's getting to the end of day 2, and you've all seen a lot and heard a lot, and might be getting to the edge of your tolerance and attention span. But this is going to be a good session. We have 2 really good speakers. I've met them before, and Anna Fang of ZhenFund is an investor, mostly early round investing. You're probably all familiar with Crunchbase. If you're not, then you're probably in the wrong room. Jager, he does basically crunches numbers for a living, and the topic today is are Asian funding rounds out of control? I think there's actually a general consensus that they are, but Anna's going to give us some reasons why maybe they're not. Maybe some of these funding rounds we're seeing recently make sense. And Jager is going to help us put some numbers to that. And so we've got 20 minutes to talk about that. I mean, let's just start with that really opening, simple question, yes or no. I mean, are these funding rounds going too far?
Well, I think there are reasons for yes and no. So let me have fun with this and start with yes, okay? So yeses would be like, for example, one of my companies that we invested in a $5 million valuation last year has gotten 4 rounds this year, 4 rounds, and it's only July. Their last round was $400 million. So they got a round in January, February, April, and closing one this month.
And we're only halfway through the year.
We're only halfway through the year. They'll get another one by the end of the year, too.
How much and from who? Just all the reporters out there can write the news?
I'm not going to say, but you know all 4 funds. And, of course, you know our fund.
So there's going to be like 5 rounds for them this year. Which company is this?
I'm wondering if I should say the name.
Yeah, I think you should.
No.
Who wants her to say the name?
Oh, God.
Yeah.
You guys won't even remember the name. It's called Xiaomushuo. See, they wouldn't even know how to spell it.
Xiaomushuo? Okay.
No. All right. You speak Chinese. No.
You want us to speak Chinese? We can get translators. Tell us about, okay.
Yeah.
Let's forget we heard the name. What do they do? Why do they justify getting 5 rounds this year?
Because I think there's a new ecosystem in play right now in China, which is, obviously you guys know about WeChat, but WeChat's mini programs is something they started pushing last year. And within WeChat mini programs, there are a lot of things you can do, like sharing and build tools. So you can imagine like a whole new app store. Instead of the App Store, basically, you have a whole new ecosystem that you can build on.
Yeah.
And this is probably the best application that's in the App Store. And basically, best application of mini programs. And basically, it does C2C exchange. It's like a eBay or Craigslist, but through mini programs, and you don't use any money. So this is the part you'll love. There's no money involved, right? So you're just using flowers, exchanging things. So like you could exchange, I don't know, your shoes, right? And you want my shoes, which are much nicer than your shoes. We could put it, no, just kidding. We can put different flower values.
So you use flowers.
You use virtual
basically
currency.
like points, right?
Yeah, basically.
That sounds pretty simple. Why would you need 5 rounds of funding to build that product?
Well, maybe someone else is going to come in and do the same thing, so I need my power chest. Or maybe people are offering me a lot of money, so I'm going to take it.
Is that a good enough reason to take money? I mean, it's a serious question. I'm not being rhetorical here.
No, I mean, we've had a lot of conversations about whether they should take that money, right? But, I think it's this is one theme that a lot of venture capitalists are looking for is like the best mini program application. And people are paying a lot of money for it.
But what are these, let's say there's going to be 5 rounds of funding into Xiaomushuo that does C2C using flowers as tokens to buy A or B. What is that outside cash doing? Is it just being spent on marketing? Is it building a product? Is it coders? What is it being used for?
Yeah, so I would say that each round, you don't have to dilute a lot for each round, right? Like maybe your evaluation goes up, but you're not diluting that much. So they're not actually taking maybe as much money as we're talking about. But it's building team, not much on marketing yet, but in the future, I think marketing will be a huge spend. I mean, you have to pay a lot for users at some point. So,
what is the team that you're building, or they are building? Is it coders and engineers?
Product. What do you call it? Operations, like Yunying,
the back end,
getting users.
Okay, I mean, Jager, you're crunching the numbers. A lot of these guys,
sure.
Not just Xiaomushuo. Sorry, forget the name. Remember that we're not allowed to know the name. Are you seeing? You clearly believe that this is getting ridiculous, but then there's cases where Anna's like, maybe it makes sense. This is a new space. The mini apps, for example, the WeChat ecosystem is very lucrative, or could be. Do you see any examples or any thoughts where you can think, yeah, this makes sense. Maybe this does make sense and is worthwhile?
Honestly, not really. I'm kind of bullish on this, or bearish, I guess, on this whole thing. It feels like there's this FOMO, right? It's something's happening, and I want to be a part of it. And this thing is going to take off. This is the next unicorn. Mm-hmm. So everyone rushes into the room to try to get a piece of the pie. Mm-hmm. And what happens is that the whole timeline accelerates. So the acceleration happens, and the things that you need, the things that, is this the right team? Is there a product market fit? Is there really a market here? Those things get compressed so that when the investment goes in, you actually don't know necessarily if the company, and I'm speaking in general terms, not in the specific terms, if the company is going to survive or not. And it takes time to figure out, can the company actually scale correctly? Do they know how to go and build the world-class team? And when you go, I have an anecdote of a company that had, before it had even closed its Series A, it had already raised its Series B and its Series C.
That's not greedy.
Which is just, it's kind of crazy. And it's a great time to raise if you're an entrepreneur in China. Awesome news. Like, there's plenty of money to go around. But there should be lessons here that we have learned in other places where we say, look, there are things that are wrong. There are things that we need to be cautious of. And one of the due diligence things that must happen is take the time. Take the time to see that the business actually grows organically. Massive acceleration can hide massive problems, and that worries me.
Now, before we got to the most recent stage of funding FOMO, which is just the last couple of years, we did have one big company, Xiaomi, right? They've IPO'd this week in Hong Kong, fell on day one, risen the last few days. What do you remember as being the pre-IPO last round? It was 46 billion, is that right?
Like that.
And it IPO'd around 54, right? Which is not a great upside for 4 years of sitting around, right?
I mean, of all of the tech companies that have IPO'd, whatever it's been, like, actually, I think Bloomberg reported on this back in May, that 2/3 of them are underwater.
Yeah,
that's not a good sign, right? There's many contributing factors to cause that. So you have like Huya going on and going IPO in the U.S. To sort of avoid some of that. But there's danger there. But
there are a lot of other numbers, right? Like if you think about like PDD, Pinduoduo, which is the other amazing company from China in the past 2 years. They did this company's 2.5 years old. They did $30 billion of GMV last year. $30 billion.
GMV is a rubbish number. Come on.
Okay, but $30 billion, and their last round was only $15 billion. They filed for IPO, right? I think it'll be $30 billion.
So they've doubled
the
rubbish
only 1x.
Number. Well, what was their revenue?
I don't know what their revenue is, but
that's the key point. This is the other thing that I also want to get to is the rubbish numbers out there that are being used to justify some ridiculous funding rounds. I mean, do you agree that like GMV is, I've argued, if anyone who follows me on Twitter will know that I've argued against the concept of GMV. I argued for many years that Alibaba should dump that number, and they eventually did. But do you see a lot of ridiculous numbers out there being used to, pimp high valuations?
Yeah, and it's just they're picking the metric that sounds the best, and that's dangerous. You looked at M17. Right, as an example.
Oh boy! Anyone from M17 in the room? They wouldn't raise their hand if they were.
So there are these examples of just when you actually look under the covers and dig a little deeper, it's fluff, and that's a real problem.
Do you think that we need a kind of a downturn in the funding rounds or even the equity markets to help balance this out, or could we get to some kind of normalcy or logic that we haven't seen for a while without having some kind of big explosion or implosion to pull it all apart?
I mean, my opinion is like you can't just make a blatant statement like that. There's if you want to make it basic, you could go and say there's the late stage and the early stage. And I think those are two very, very different stories. I think right now Asia is kind of out of control with their late stage funding, right? The 20 largest funding rounds this year, 17 of them have been in Asia.
17 of 20 globally.
20 globally. That's like something is wrong there. Unless maybe people have good reasons, but I feel like there's something wrong there. But when you look at the rest of it, if you remove all the $100 million rounds, you just get rid of all the $100 million rounds in the world. China actually only had about 14% of the world venture funding going.
Smaller rounds. Yeah.
Much smaller, right? Even though with all of the $100 million rounds plus, they had 37% and actually the majority of the funding in Q2. So like that tells us a couple of things, right? One, way too heavy on the $100 million plus rounds, but on the other side, there's still an emerging startup ecosystem here, and like, there's no doubt that there's huge opportunities. If you are a Series C, Series A, Series B company, like this is a great time to be in China because that is where the real growth is happening. So that's the good news. The bad news is that there's a lot of dumb money, for lack of a better term, coming in. There's 3,500 new VC and PE firms started in China in the last year.
In China, just
in China.
Everybody's a VC.
That's right. And they've raised $250 billion. And there's reasons, right? Like the LPs are trying to figure out how to, I can't put as much money overseas, right? I need to figure out how to go and do smart things with my money now. And they put it into a VC. But that firm maybe has
really just supply-driven funding, right? It's not demand side as much as supply side.
Right.
But of course, if a startup's there with people knocking on their door saying, "Take my money, goddammit," what are you going to do? Say no?
You'll take it. And that's where the due diligence. I question the due diligence for some of these deals.
And you're really focused on like kind of the angel, the seed, the early rounds, right? And for you, is there such thing as dumb money in later rounds? I mean, isn't it exciting?
I love dumb money.
You love dumb money.
I love dumb money.
Me too.
And you don't see any.
I mean, no,
is there
for
any
later
downside?
rounds.
Exactly.
Yeah.
Do you see
Not
any
for
downside to dumb money? Is there any that you can think of? Like
I just think it's kind of a waste. Is like I don't like waste in general, but that's kind of I just feel bad for it. But I mean, for me, it's great. I mean.
So if some idiot VC comes in...
No, but the reality is all the best companies get funded by the best funds. So like the 3,500, like I don't even know a single fund that started in the past year. Zero in China. Because like everyone good that I know who left to start a fund, that happened years ago, and no one's leaving right now because they don't think they can start a really good fund right now.
They think what, it's too competitive or...
Yeah, and maybe there's like enough, I think there probably are enough good funds in the Series A to C space in China. I don't think that there...
Is there a shortage of good companies to invest in, good startups in, say, the North Asia space, Greater China?
Oh, there's so many good startups. I mean, we had...
So you don't see a shortage of that?
I'm not, and here's why. Because I mentioned there's so many new opportunities, right? So the WeChat ecosystem is another. For example, every week this past month, we've had a new brand pitch us, which is different. I mean, usually brands, I think it's happening in the US too, like Hims and things like that. But in China, it's because there's like a opportunity where KOLs, so there are a lot of KOLs that you can still buy them for relatively cheap to help you market, right? There's Douyin, this new ByteDance Toutiao platform that you guys know, like 100 million DAU started in the past year. So there are all these new platforms to promote your brands. And so there's another opportunity to create brands. That's a new space, right? With logistics, this past month, I've seen a lot of like logistics delivery platforms like Luckin Coffee, for example. Today just announced $1 billion valuation. You can analyze those numbers. Today it just came out. You should write an article. I love Luckin Coffee, but like they sell 5 million cups of coffee. I think it was per month. Last month in May. In May they sold 5 million cups of coffee. This company company started in January. I wish I was an investor. I'm not, but I'm just saying there are these new.
You're feeling a little FOMO right now?
Total FOMO. I would put money in it. But think about it,
But surely now there's going to be 3 other startups trying to do the same thing, having seen.
I've got pitched like breakfast. like afternoon snacks, because there are all these delivery people, right, who don't have anything to do from like 1 to 6. So why not sell snacks? Will be the next one, and it's only 6 RMB to deliver something for the delivery, right? So that delivery network creates another set of applications, right? Like WeChat Pay created like Ofo Mobike, for example, right? So all these different innovations create a lot of, I'm just talking about the consumer space. A lot of
in that area, sorry to interrupt, on that area, we're talking O2O, right? Offline to online, online to offline.
Yes.
And we saw, like amongst BAT, Baidu, Alibaba, Tencent, we saw a huge explosion a few years ago when they were investing a lot. Baidu kind of got out. Now we've got Meituan Dianping about to IPO. We saw a consolidation. But we did see people losing money. We saw bike rental in the last year has exploded, and now we start to seeing it roll back, and it is bike rental, not bike sharing. Are we at a point where we're going to see some rollback, some consolidation, some failures, or we still got a bit more to run in this kind of mini programs? Is it too early to see that yet in the mini programs or that part of the ecosystem?
I think there have been a lot of failures in O2O.
Oh, many. But we're kind of O2O phase 2.
What are the next failures?
Yeah.
I think to your earlier question, I do think there's going to be tightening of money. I mean, we'll see how all the IPOs do. But certainly the Chinese market, local domestic market, is not doing that well. And for venture capital, I think it will be harder to fundraise this year for venture capitalists, which means, everything will get squeezed a little bit.
Do you see any takeaway from the Xiaomi IPO, the fact that we couldn't call it a failure. I mean, it's not an M17 level failure, but it did list, and $54 billion is not nothing. Or is the IPO for you that's so far down the track because you're early stage? It doesn't really
I think it's
matter.
a massive success. I know it's a little bit lower than where we want it to be, but I was looking at my WeChat moments that day from the IPO, and there was so much momentum. Everyone just, because in our circle, it's all my friends are invested. I'm not invested, but again, FOMO. But everyone's just so happy for them. This is I don't know how many, 7 years old, 6 years old, this company, right? To create if anyone here can create a company that's $50 billion in 6 years, please come talk to me.
It is a bit harsh. A lot of media, do say, the IPO has been a failure, but that's a little bit harsh, right? Because, okay, it may not be a huge step up from the 46 billion valuation, and we like to see a big final pre-IPO to a big IPO. We like to see that big step. But, those who came in round A, early rounds 1, 2, 3, they're sitting on very big returns, aren't they? And so they're not really failures. Do you think with all this dumb money coming in that people have to kind of temper their expectations, that you're not going to see 50 buy returns if you're in a Series A? You may have to accept only a 30 buy return. Or do you think that we can still expect those kinds of returns, 6 or 8 years?
When our founder, one of his companies was 1000x.
Wow.
Which was awesome. And I think at our current valuation, where we're going in around 5-10 million for the initial round, instead of 1 to 3 million, we're not going to see 1000x. I'm not going to see 1000x.
And you're okay with that?
I think 100x is okay.
You're
what
okay?
Do you think?
Really? You're really okay dialing it down by a 0?
Because I'm an angel. If it's between 3 and 10, I may not be happy, but. If I was PE and it was instead of 10, it was 3, it might be harsher. But between 100 and 1,000, it's okay.
I want to bring it back to one thing that Jager said, which this number surprised me, $250 billion. I knew it was a lot, but I didn't know it's that much. It reminds me of another elephant that's really in the VC room right now. It's a big Japanese elephant called Softbank. Is that good or bad for you? These are huge.
They're awesome for me.
They're awesome for you.
Yeah, they can write up my companies. Isn't it great?
So you're cool with that? Yeah, you don't think it's going to just come in and crowd the market and eat everything up? Or is it because they're so late in the investing process that for you as an angel seed, you don't mind?
For me, they come in and they'll give a hopefully great valuation to one of my companies. I mark it up in my books. Maybe I can sell some shares to them.
And so it doesn't matter to you. Do you sense that those who are more mid-round VCs, the BCD VCs, might be a little bit concerned or disconcerted?
I'm sure later stage people, it's more competition. I think there is more competition in that later stage now.
Do you have much of a relationship with these later VCs? You're often talking about it, kind of handing over or upselling your companies to them. What are they telling? What's the feeling from them?
Yeah, sometimes they ask if I want to sell some shares.
That's it? You spend a lot of time.
Sometimes they ask me, what am I seeing? What trends do I see? That's kind of what I'm...
Right, that conversation that's always gone on in the industry. Now, we talked about, everything above 100. If you strip that out, then we're seeing a lot smaller. The overall topic is, are Asian funding rounds out of control? Is it a bit too broad to really put all Asian types of funding rounds? Should we be dividing up between, the seed and angel, the early, to the A's, and compare it then to the DEF rounds? Is that the better way to look at it?
The things I would be comparing are just what you said, early stage versus late stage, but also, again, time to raise. I think that is one of the critical things that is just getting overlooked for some reason. And that time to raise is the Achilles heel of this bubble in my mind.
What are you seeing? What are the metrics?
When you see the cadence of the raise, and we've said sort of 2 anecdotes of some very fast raises, but generally speaking, I haven't done the math, but generally speaking, my gut says that the time to raise your A to the B to the C in China is much faster than today in America.
But there's Bird. Let's talk about Bird.
Yeah,
Yes,
fair.
yes.
Oh, for sure. Burn is very different. And to counter that point, when you raise so much money, it is so easy to hide the problems of the fundamentals of your business, right?
Yeah.
And yes, your burn might be very, very low. The people are working many more hours. There's many advantages of having a company in China, but the problem is if your business actually shouldn't be a business, that can get hidden if you raise too much money, so you could make this company that has a low burn rate persist for a very long time.
And I'm trying to find a way for you to think of this as being bad, but it doesn't seem to be any way that you see it as being bad.
Valuation.
But I do wonder if you care much about like fiscal discipline in your startups. You get in, you want to see a founder being a little bit smart with their money. And my concern is that when you see all this money coming down the pike at, say, Series C, and it's basically kerosene on the fire. They're burning money, let's just throw more money on the fire. Is that at all a concern to you, that maybe you'll start to see founders not being quite as disciplined as they should be?
I think founders' ability to manage their pace is extremely important. I mean, there are some people who burn way too much money. I mean, we've had board meetings where, maybe a startup spending like 10 million RMB per month when they should be spending 1 million RMB per month, and that's a huge issue, right? Because they're not going to get to the next milestone for them to get more money.
Do you rein them in? Do you call them up and say, hey, we need to talk about this?
No, we talk about whether we should be, well, it's hard to fire people in China. But
good luck with that.
we talk about bringing in a CFO to come, or CEO to come manage the company.
Is that your polite way of saying we want to fire you? We want to bring in expert help?
They never go away, and they don't. No, I love the founders. The founders are awesome. They're God, right? No, but I think it's also really important to know how to spend money. Sometimes you give them money and they don't know. They don't know how to use it, which is also a problem because there's momentum. Like you need that momentum, and momentum costs money sometimes, and you have to know how to use it.
Right. We're getting down to 1 minute to go. Jager, I want to finish with you, and that is you've looked at all this data for all these years, including the last 12 months. Gaze into the crystal ball for me and look out the next 12 to 18 months. What do you think is going to be happening in the earlier rounds, the mid rounds, the later rounds? Let's just limit it to Asia, North Asia, Greater China. Do you think that it'll slow down? Are you seeing any signs it'll slow down? Do you think it'll speed up, or will there be divergence?
I think it's still going to be speeding up. I mean, it grew 4x last year. The number of early stage venture rounds in the last year. I think that will continue to accelerate, which is great. I do think you're going to see some big shifts in the categories of companies. This is a very controversial thing I'm about to say, but I think AI companies are going to sort of fade for a bit until there actually is proof that these AI companies can do what the promise is.
An AI bubble?
It's an AI bubble. And I think that will be an interesting shift as we move away from that, because that's clearly the hot thing, just as chatbots were.
Cool. Jager,
12 months ago.
Anna, thank you for your time. Please give them a round of applause. It's been a great chat.
Thank you.
Thanks.